When most people hear the word crowdfunding, they often think of Kickstarter campaigns or product pre-sales. But regulation crowdfunding, Reg CF, is something entirely different. This is true securities crowdfunding, regulated by the SEC, where the public can legally invest in private companies. Reg CF was created under the Jobs Act in 2012 and became fully operational in 2016. Its purpose was simple: to give everyday investors access to private markets, and to give small businesses access to the growth capital without needing banks or venture capital. Today, it has become one of the fastest growing funding mechanisms for small businesses in the United States. Let's start with the key rule. Regulation CF allows companies to raise up to $5 million per 12-month period from both accredited and non-accredited investors. This matters because before Reg CF, only wealthy individuals could invest in private companies. Now anyone can participate, within certain limits, which dramatically expands the potential investor pool. Unlike Regulation D offerings, which are typically marketed to accredited investors, Reg CF pools capital from customers, communities, retail investors, and supporters who believe in the business. This democratization has reshaped early stage and growth stage funding. Now let's talk about how Reg CF actually works. To raise under Reg CF, a company must use an SEC-registered funding portal or broker-dealer platform. These platforms include names like WeFunders, Star Engine, Republic, NetCapital, and others. The platform acts as a digital marketplace where investors can review offering details, track progress, and invest in small increments, sometimes as low as $100. Before going live, the company must file a Form C with the SEC. This document includes basic company information, business description, risk factors, financial statements, ownership structure, offering terms, a discussion of financial condition. If the company is raising over a certain threshold, generally $124,000, the financial statements must be reviewed by an independent CPA. At higher tiers, they must be audited. This ensures transparency and protects investors. Now let's talk about investor limits. Under Reg CF, the amount a non-accredited investor may invest per year is capped based on income and net worth. Accredited investors, however, have no limits. The purpose of these caps is simple: to prevent individuals from overcommitting their savings into high-risk private investments. The platform itself verifies investor limits and ensures compliance. One of the most important aspects of Reg CF is the marketing flexibility it provides within boundaries. Once you file your Form C, you may publicly promote your offering, but there are strict rules around what you can say. You may share what's called a tombstone ad. A tombstone ad contains only a statement that you are conducting a Reg CF offering, the name of the platform, basic terms, a factual description of the business. You are not allowed to include forward-looking statements, performance projections, or detailed solicitation materials outside the portal. All substantive investor communications must take place on the portal, where the SEC and the public can review them. This creates transparency and prevents misinformation. Now let's talk about what companies actually use Reg CF for. Most service-based businesses use Reg CF to fund hiring, marketing, equipment, technology upgrades, launching new locations, expanding delivery capacity, and working capital for scale. These are straightforward, tangible uses of proceeds that investors understand because these are real businesses with proven revenue. Reg CF investors often feel more comfortable investing compared to early-stage tech startups. The data backs this up. In 2024, Reg CF saw more than $800 million raised, and a growing share of that came from established, revenue-generating companies rather than speculative startups. Now let's address the biggest benefit of the Reg CF. You can raise from your customer base. A restaurant may have 5,000 loyal customers. A home service company may have thousands of past clients. A regional brand may have tens of thousands of followers. Reg CF allows these businesses to convert customers into investors. This creates a strong alignment. People who invest tend to buy more, refer more, and stay loyal longer. This phenomenon is sometimes called community capital. It's powerful and is something traditional financing never provided. But not everything is easy. Reg CF comes with responsibilities, annual reporting through the Form CAR, transparency requirements, communication protocols, restrictions on secondary sales. Companies must maintain accurate books, follow their disclosures, and treat investors professionally. It's not free money. It's regulated capital. Before we close, let's summarize the core benefits of the Reg CF. You can raise up to $5 million per year, accept both accredited and non-accredited investors, use your existing audience as your investor base, avoid traditional bank requirements, create community ownership and brand loyalty. Reg CF is not just a financing mechanism. It's a modern tool for building companies through broad support.